Dear friends, welcome to weekly view on markets. Markets consolidated with increased volatility during this week. India weeks went up more than 6%. Bank Nifty touched an all-time high and closed above 55,000 as many banks and financial companies posted good Q4 results. FIIs and DIIs are continuously buying in the markets. Why the markets are falling despite institutional buying? There is panic among HNI and retail investors under the backdrop of India-Pakistan tensions. Typically, markets go to higher levels when weaker hands get out in panic. Institutional buying, retail selling, and high volatility index all indicate market structure has undergone a change and preparing for next move to higher levels. Improved high frequency macroeconomic data for the April month also suggests to this. Turnaround is expected in the markets within next few months. Investors should hold on to their investments and buy on dips. Now let us look at performance of indices. Nifty closed at 24,346 with a gain of 307 points, that is 1.28%. Nifty closing about 24,000 level is a psychological win for the markets. Bank Nifty has closed above 55,000 with a gain of 451 points, that is 0.83%. Mid cap and small cap sectors underperformed during this week. Mid cap gained about 134 points and small cap lost about 105 points. India VIX has gone up by 6.35 points, that is 18.20. It is at 18.25, indicating a kind of panic in the market. Now let us look at sectoral performances. Oil and gas sector gained the most as the crude oil prices have cooled off to record low levels. Realty sector has gained about 2.58%, infrastructure gained about 2.39%, manufacturing gained about 1.53%, auto sector gained about 1.33% with a good sales number for the month of April 25. Healthcare sector gained about 1%. Information technology, private banks, pharma sector, public sector companies, energy sector, NBFCs all were consolidating with less than 1%. Media's sector lost about 1.71%. Consumer durables, metals, and FMCG all lost 0 to 1% and consolidated during this week. Now let us look at the technical charts. This is the daily chart of Nifty. Here we can see Nifty has come to the major resistance level. This is around 24,300, and after that we can see 2 3 days of consolidation. And if Nifty closes about this resistance level, then the next target for Nifty will be 25,000. There is a major resistance at 25,000. So Nifty is likely to test 25,000 in the coming weeks. This is the chart of Nifty mid cap index. Mid cap index also had touched the resistance level of 54,750 levels. After that, small correction is there, and it has to go above 54,750. Then we will see further up move. On the lower side, Nifty Mid Cap Index has got a strong support at 51,000 levels. This is the chart of Nifty Small Cap Index. Small Cap Index has good support at around 15,200 levels, and it has major resistance at around 17,500. So Nifty Small Cap Index has to cross this 15,750. Then we will see Nifty Small Cap Index will be going to the higher levels after that. This is the chart of Bank Nifty Index. Bank Nifty Index displays very strong up move on the charts, and after a strong up move it is consolidated for about 10 days or so, and Kotak Mahindra Bank and SBI have announced their results at the weekend. Both the results are good, and the asset quality has improved. So because of this, uh, we may see further up move in the Bank Nifty in the coming week. Now let us look at some of the macroeconomic fundamentals of the market. India's macroeconomic fundamentals continues to improve. RBI forex reserves had touched 688.13 billion US dollars. It is up by 1.3 billion US dollars for this week. Good forex reserves is a positive indicator for the macroeconomic condition of foreign exchange rate is at 84.53 rupees per dollar. Dollar index is at 99.68. Rupee has strengthened from around 88 levels to now 84.53 as dollar index has dropped from 109 to 99.68. Brent crude price is at $61.29 per barrel. Low Brent crude price is good for Indian economy as our oil imports will get reduced. That will help to reduce the inflation and also our import bills. So we have seen buoyancy in oil marketing companies in the last week due to the lower oil prices. Gold price is at 95,510 for 10 grams, 24 carat. Gold prices have dropped by around 4 to 5,000 levels after hitting 1 lakh for 10 grams. FIIs continues to buy in Indian market. They have bought 7,680 crore during this week in equity. DIIs bought 9,269 crore in equity. Both FII buying and DII buying is giving a good support to the markets. Auto sales for the month of April have come. Overall, the auto sales are in growth mode. So company-wise auto sales are like this. Maruti sales is up by 7%. Mahindra and Mahindra passenger car vehicles sales is down by 8%. Tata Motors sales are down by 6.1%. Two-wheeler sales, TVS Motors have recorded 16% growth. Hero Motors have recorded a degrowth of 18%. Eicher Motors, that is Bullet motorcycles, have recorded a sales growth of 25%. Mahindra and Mahindra has recorded a sales growth of 28% in commercial vehicles. Eicher has recorded a gain of 27%. Ashok Leyland has recorded a lower sales by minus 6%. Tata Motor also recorded lower sales growth by minus 6%. Overall, auto sales are quite good. That is why we have seen good buoyancy in auto sector stocks this week. GST collections for the month of April is at 2.37 lakh crores. It is one of the highest GST collections. It is up by 12.5%. So this indicates that industrial and services activity in the economy are picking up. PMI manufacturing index is at 58.2, which indicates an expansion in the industrial activity, manufacturing activity. This is again supported by the GST data. So this shows that overall economy is in a growth mode. So I looked at charts. Charts show consolidation in the coming week. Q4 results other than financial sector are quite average. There is not much which can trigger a rally in the market. Other sector results are lackluster and they may not be able to trigger any rally in the market. Some stock specific action may be there in the coming week based on quarterly results announcement. Markets may consolidate with the overhang of India Pakistan tensions. So, till the overhang of this tension goes out, there will be some kind of panic reaction and heightened volatility in the markets. Investors need to be careful. SIP investors should continue their investments. They have nothing to worry. The volatility benefits them as they get averaging benefit during the volatility. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We'll meet again next week. Thank you.